Ever hear about the Federal Reserve's balance sheet in the news and wonder what it actually means? Today I'll break it down in plain English. Please hit the like button, the subscribe button, and the bell notification. What's really on the Fed's balance sheet and why it matters for our economy and your finances. Let's start simple. A balance sheet is basically an accounting statement that shows what you own and what you owe. For the Federal Reserve, it's a record of all the assets it holds and all its liabilities at a given point in time. So what's actually on the Fed's balance sheet? Let's look at assets first. The biggest chunk is U.S. Treasury bonds. The Fed buys these from the market to add money into the financial system. Next up, mortgage-backed securities. The Fed started buying these mostly after the 2008 crisis to support the housing market. There are also other assets like foreign currency and emergency lending programs. Now, over to liabilities. Currency in circulation, yep, those dollars in your wallet, are technically a liability on the Fed's books because they've promised to honor them. Bank reserves are another big one. This is money that regular banks keep at the Fed, and when the Fed buys securities, these reserves increase. There are also things like reverse repurchase agreements and U.S. Treasury deposits, which play a role in more advanced monetary operations. So why should you care? First, monetary policy. When the Fed wants to stimulate the economy, it buys securities, which grows its balance sheet and injects more money into banks. This makes borrowing cheaper and spending easier. Second, inflation and interest rates. A growing balance sheet usually means more money in the financial system. Sometimes that can contribute to inflation if too much money chases too few goods. Third, financial stability. In a crisis, the Fed can use its balance sheet to buy or lend against all kinds of assets, which helps stabilize markets. But what happens when the balance sheet shrinks? When the Fed sells assets or lets them mature, its balance sheet shrinks, and money is pulled out of the financial system. This can slow down inflation, but sometimes it can also slow growth. It's all about finding the right balance. Now, why is everyone talking about it right now? In recent years, the Fed's balance sheet hit record highs thanks to efforts to fight recession and support the economy during events like COVID-19. Whenever it changes direction, growing or shrinking, it has ripple effects across the stock market, interest rates, and even on our savings and loans. So, in summary, the Federal Reserve's balance sheet is much more than just an accounting record. It's a powerful tool that can shape the entire economy. If you want to know more about how these policies affect you, drop a question in the comments below. Please hit the like button, the subscribe button, and the bell notification. Let me know in the comments what other Fed topics you want me to decode.